Good morning, Al from Boston. Let's kick it off. Okay, the title of this video is probably an eye-capturing one because you probably have the same questions. Why is it that the spot ETFs are going up and the price hasn't risen significantly? Well, there are some very good reasons, and I'm going to explain them to you very systematically so you understand the whole picture from a 10,000 foot view. Right? XRP, as everybody knows, is the native currency, cryptocurrency of the Ripple network, right? And you know what it does? It facilitates fast, low-cost cross-border payments, right? Unlike many other cryptos that are out there that's driven by retail speculation, XRP's value proposition always hinged on real-world utility in financial systems, specifically partnerships with banks, payment providers, so on and so forth. This price trajectory has been hampered for years by regulatory uncertainty, most notably the SEC, right? Uh, the SEC has filed that lawsuit in 2020, alleged that XRP was an unregistered security, created a cloud of doubt over its legality and usability in institutional finance, right? That created like this, I would call a mass cloud of doubt over its legality, right? In 2025, in August, it was closed out. It was resolved with a $125 million settlement and dismissal of all appeals, and affirming that XRP is not a security in the programmatic sense. Exchange sales is what I mean. Despite this partial victory, XRP's price hasn't surged dramatically. It reached a all-time high of like 365, 370 in July 2025 amid lawsuit anticipation, but it settled down around 223 as of this month. Now it's reflecting gains of a modest sub-dollar. It's like under a dollar from like 2023 to 2024, and that's okay. The core reason for this muted price performance, it ties directly with the cautious approach of major financial institutions and their clients, such as pension funds, sovereign wealth funds, and endowments. These entities manage trillions of dollars in assets and operate under a very strict legal and fiduciary framework that prioritizes capital preservations over high-risk bets. All right. Without clear regulatory guardrails, they simply can't allocate the significant capital to assets like XRP, suppressing the overall demand and keeping the prices in check, keeping it low. Now, let's talk about some of these laws that are out there. These regulatory clarity is more or less a prerequisite for institutional adoption. Institutional investors, right, especially those handling retirement funds, pension funds, are bound by a web of laws and guidelines and internal policies that demand rigorous due diligence, right? And there's a lot of ambiguity, right? Regulatory ambiguity that acts as barriers. Good example is the fiduciary laws under ERISA. In the United States, the Employee Retirement Income Security Act, ERISA, of 1974 governs most pensions and 401(k) plans requiring trustees to act solely in the interest of beneficiaries with prudent investments. Cryptocurrencies like XRP has always been viewed speculatively and volatile, right? Lacking the transparency and oversight of traditional assets, i.e., stocks and bonds, right? Without regulatory approval, classifying XRP as a non-security and outlining its risk profile, fund managers risk personal liability for losses. All right, that's the big thing. For instance, even after post SEC resolution, broader crypto markets still face minimum regulatory oversight compared to equities, making direct exposure a compliance nightmare. And that is true. A traditional 401(k) plan explicitly prohibits direct crypto holdings, forcing investors to sell into self-directed IRAs or some specialized vehicle if it's available at all, right? That's the other thing. The second thing is the anti-money laundering laws and know your customer rules. Institutions must adhere to the Bank Secrecy Act and FinCEN guidelines, right? These are the laws that scrutinize crypto transactions for illicit activity. The SEC lawsuit amplifies fears that XRP could be tainted as a security, potentially triggering reporting requirements or even bans on custody. Pension funds often rely on custody assets with regulatory banks, with regulated banks rather, and avoid assets with unclear status to prevent audits, fines, and reputational damage, let's say. This is a regulatory landmine, right, in terms of risk. And that's what keeps XRP off balance sheets, limiting liquidity and price discovery. Okay. And another thing is the IPS, right? The investment policy statements. Every major fund has an IPS dictating allowable asset classes, volatility thresholds, and diversification rules. Crypto allocations are often capped at 1 to 5, even in progressive portfolios. But if regulators deem them prudent pre-2025, that's a different story. Pre-225, the Ripple case made XRP a non-starter, and exchanges in the United States, which you all saw, delisted it. And custodians like BlackRock shielded away from ETF proposals to lingering ambiguity. State level rules vary wildly, right? Every state has a different rule. While over 20 states pushed pro-crypto pension bills in 2024 and 2025, others surged outright prohibition to protect retirees from volatility. Those are Democrat states. Direct purchases expose institutions to operating headaches. We're talking about there's become a need for structured asset vehicles like ETFs. ETFs provide a regulatory wrapper, if you will. The XRP ETFs have lagged, the approvals, that is, right? In August of 2025, the executive order aimed to open 401ks to crypto and alternatives, but implementation is wicked slow. And the SEC's generic listing standards only approved in September 2025 after all these years. It's pretty shitty. Without these, pensions can't easily deploy billions of dollars, hypothetically, instead of what they have right now, which is a mere 5% of pension allocations. That could push XRP past $70 in a heartbeat, and that's speculative until infrastructure catches up, right? So the impact, I'll repeat it one more time. The institutional hesitation creates demand and supply imbalance. Retail traders drive short-term volatility, but without smart money inflows, prices can't sustain breakouts. The SEC resolution removed the biggest overhang, yet XRP's post-August stagnation hovering at $2-3 stems from a broader factor like macroeconomic headwinds, rate cuts, geopolitical tensions, and market waiting ETF catalysts. Analysts that I've read point to friendly compliance and ETF launches as the next trigger. Do I see it really popping? Not really. With institutional, participation, I think over 60% of XRP's volume in late 2025 is a good start. And once there's regulatory clarity, the pensions, the hedge funds are all just going to pour in. In essence, XRP's price reflects more or less a waiting game for regulatory clarity. All right. And like I said, the retail investors, it's not sufficient enough to find price discovery. As the framework codifies ETFs or risk updates, all that stuff, expect pent-up institutional demand to unlock upside. And it's going to validate forecast $3 to $6 by the end of the year, $10 by 2026. Until then, the asset, as I see it, remains undervalued relative to its utility potential. What does that mean? You'd be smart to buy it. Basically, you'd be smart to buy it. All we're waiting for is that regulatory clarity piece, which is they already released half of the documents. So I see sometime in January after Christmas, sometime January, mid to late January, as this finalization is of the regulatory clarity bit. And then it's just going to be 2027. It's going to be just boom, boom, boom. And you're going to see some real numbers pop up. So that's the reason why I know a bunch of you guys that had messaged me regarding this. And I do read your emails and stuff, man. But I just want to make sure that we're all on the same sheet of music. I won't be around for a little while, but I will try to communicate as often as I can with the project I'm working on. And I'll see you later. This is Al from Boston signing out.